Bitcoin is bleeding. Again. And if you think the worst is over, think again. This isn't just a dip. It's the opening act of something bigger, messier, and more painful than most retail investors are ready for. In today's video, we're breaking down what triggered this latest crash, why it's far from over, and what could come next for Bitcoin and the entire crypto market. We're not here to sugarcoat it. We're here to face reality. If you're in crypto right now, you need to be more informed and more cautious than ever before. Because what happens next could define the next 12 to 18 months. Let's get into it. Part 1: The Crash Explained. Bitcoin has dropped over, insert latest percent, from its recent high, wiping out billions in market cap in days. The trigger? A perfect storm. Small diamond first, macro pressure. Sticky inflation and aggressive Fed policy are squeezing liquidity out of risk markets. Bitcoin isn't immune, it's in the blast zone. Small diamond second, regulatory heat. The SEC's crackdown is expanding, with lawsuits and policy threats hammering confidence across exchanges and tokens alike. Small diamond third, leverage unwinds. As always, traders got greedy. Over-leveraged positions are being wiped out, triggering domino-style liquidations that accelerate price crashes. And don't forget sentiment. The hype is gone. Fear is back. And without strong hands stepping in, the market will keep spiraling. Part 2: Why it's just beginning. Here's what most people forget. Bitcoin crashes don't happen all at once. They unfold in phases, and if you know the signs, you can avoid the worst of the fallout. Shock phase: everyone's glued to the charts. Twitter's on fire. Blood is everywhere. Relief bounce: it recovers fast. Feels like the bottom. Spoiler, it's not. Reality phase: no fireworks. Just slow, steady erosion. Investors lose interest. Capitulation: nobody's talking. Nobody cares. That's when the bottom forms. Most people are still betting on the bounce. But zoom out, and you'll see the bigger picture. Weak volume, falling interest, and declining inflows don't lie. What we're seeing isn't strength, it's the calm before a deeper drawdown. Part 3: The Warning Signs. Want to know where Bitcoin's headed? Watch the data. It tells the truth. Checkmark on chain activity is drying up. Fewer transactions means less real demand. That's a red flag. Checkmark stablecoin inflows into exchanges are down. Translation: big money isn't coming in to buy the dip. Checkmark funding rates are flipping negative. That means sentiment is shifting bearish in real time. Now here's a big one: miner behavior. When miners sell, they're not guessing, they're reacting to hard math. If they're dumping BTC, it's because margins are tightening, profitability's falling, and they'd rather hold dollars than coins. Ignore the noise. Follow the metrics. The smart money always does. Part 4: What comes next? So what's next? Here's where things get interesting. Sideways pain: Bitcoin trades flat, low volume, low interest. This drains retail patience. People exit out of boredom. Deeper correction: break $25,000, and we likely revisit $20,000. Break that, and $17,000 is back in play, fast. Black swan drop: maybe a major exchange collapses. Maybe a new regulation blindsides the market. It's rare, but it happens. None of this means Bitcoin is dead. Far from it. Every cycle clears out speculation and refocuses the network on real use cases and strong builders. But make no mistake, there's more pain ahead before we see true recovery. Surviving this phase requires clarity, patience, and discipline. Part 5: What to do now. Let's talk strategy. What should you actually do right now? Checkmark stacked cash. The next real buying opportunity might not be today, or even this month. Cash gives you options. Checkmark track levels: $25,000, $20,000, $17,000. These are your markers. No emotional trades, only informed ones. Check marks stay detached. If headlines are swinging your emotions, you're already losing. Zoom out. If you believe in Bitcoin's long-term potential, then these crashes are nothing new. But that doesn't mean you should blindly hold or buy. This is when smart positioning matters most. Cycles punish the reckless, but they reward the prepared. Choose wisely. Subscribe for more crypto update.